The triple planetary crisis of climate change, nature and biodiversity loss, and pollution underpins the urgency and importance of international collaboration across all strands of society. Banks have a unique and critical role to play in pivoting the global economic system to redirect capital and accelerate the pace and scale of positive change across entire economies. In order to see meaningful changes at the heart of organizations, every single bank employee needs to consider responsible and sustainable practices in their day-to-day decision-making. From understanding more responsible lending practices to learning how to work with their customers to help them green their businesses and offer sustainable products, banks and their employees are embarking on a journey of unprecedented scale. Therefore, we are delighted to introduce the Principles for Responsible Banking Academy, a unique online learning program designed for banking professionals all over the world. The Academy brings together the United Nations, the world's most established professional banking institute, and one of the largest organizations for international development cooperation worldwide. All of which, thanks to their many years of experience, are at the forefront of sustainable finance. Through education and training, the Academy will support banks in the global sector to align their professional practices with the UN Principles for Responsible Banking, the world's foremost framework for ensuring that bank strategy and practice align with the vision society has set out for its future in the Sustainable Development Goals and the Paris Climate Agreement. The Academy will create a global network of responsible bankers, mainstreaming responsible banking and sustainable finance through capacity, capability, and culture. This leading-edge educational program is the first of its kind, having been designed by industry experts in consultation with banks worldwide. The training program can be completed entirely online, making it widely accessible to professionals worldwide. The curriculum is suitable for individuals at all stages of learning, whether beginner, specialist, or at executive and board level. We believe that through the learning opportunities offered in our unique curriculum, we can support the banking sector's transition toward a better future, one which is aligned with better practices, better decision-making, and has a better impact on the world. If you want to be part of the change and register your interest in the Academy, please visit our website at www.prbacademy.com.
Good morning, good afternoon, good evening to everyone, wherever you are joining us from in the world. I'm Joy McKnight, I'm editor of The Banker, and this is my great pleasure and privilege to be introducing today's virtual conference, the second and last day of the Chartered Banker Institute's annual banking conference. Yesterday, during day one of this conference, the discussions covered responsible banking in a global inflationary climate, as well as how responsible banking can support equality, diversity, reduce poverty, and on the other linked sustainable development goals. The conference also looked at the associated challenges for responsible banking. Today, we'll be focusing on why responsible banking values matter, as seen through the lens of the UN Principles for Responsible Banking. And I'd like to start proceedings today by introducing our first keynote speaker, Simone Detling from the United Nations Environment Programme Finance Initiative. Simone is the banking lead for UNEP-FI, and she leads the banking team of the UN Environment Finance Initiative, a global partnership between the UN and more than 200 banks, investors, and insurers. As such, she manages leadership initiatives with banks from over 60 countries around climate-aligned sustainable finance. She holds an MA in International Economics from the Johns Hopkins School of Advanced International Studies in Washington, D.C., and during her career has lived and worked in various developing countries.
Good morning and welcome to the second day of the Chartered Banker Annual Banking Conference. What makes a bank a sustainable bank? There are several dimensions in answering this question. But I think the one that is most crucial today is the following. A sustainable bank is a bank where every employee understands how her work and how her decisions relate to achieving a sustainable, livable future. And where every employee does their work and makes their decision, taking our society's future into account. And that is not a trade-off from business success. It is a prerequisite. With the Sustainable Development Goals, the Paris Agreement on climate, and soon global agreements on nature and plastics, the world's nations have set their goals for a sustainable future. And any bank that wants to be successful going forward needs to understand where our societies are heading, what the transitions are that are ahead of us, and how to best position itself to support these transitions, but also succeed in this changing world. The principles for responsible banking are the global sustainable banking framework that guide banks in positioning themselves for the transitions, the changes ahead of us. It does so by guiding the banks in strategically aligning with society's goals, by analyzing and being transparent on their positive and negative impacts, setting targets in key areas such as climate, biodiversity, poverty, gender equality, pollution, engaging with their clients on their sustainable transition, because we know that banks can only transition with their clients. The principles guide banks in collaborating with key stakeholders, adapting their governance and culture, and being accountable for their progress and for their contribution to a sustainable future. By now, over 300 banks from over 80 countries worldwide have joined the Principles for Responsible Banking, which are now representing about half of global banking assets. The Principles for Responsible Banking are about achieving sustainable banks. Banks where every employee considers the impacts of her decisions on our future. And an absolutely essential component in creating a sustainable bank is thus education, professional education. And so I am very happy, proud, and grateful for our collaboration with the world's most established professional education body, the Chartered Banker Institute. And this collaboration has yielded the Principles for Responsible Banking Academy. It has been developed together by the Chartered Banker Institute, the UN Environment Finance Initiative, and GIZ. And of course, with a range of banks from across the world, making sure that its contents are really practical and applicable. The Principles for Responsible Banking Academy provides online access to bank employees around the world to give them skills and knowledge to consider responsible and sustainable practices in their day-to-day decision-making. Over the next 5 years, the Academy aims to provide training to millions of bankers worldwide. It will become an important element in changing the mindset, in creating a sustainable banking mindset among industry professionals worldwide. By making the Academy's education and training so widely accessible across developed, but also developing and emerging economies, it provides an inclusive approach to developing banking skills and knowledge, regardless of where you are. And so for the first time, banks around the world can offer all employees access to high quality, dedicated training and equip them with the knowledge and skills that are essential for a bank to manage today's challenges and succeed in the transitions ahead. As of its launch, the Academy will offer 4 training modules, a foundational one for bankers who are just getting started with the topic, an in-depth module on climate-related issues, a unit for bankers who are working with clients and supporting them in their transition, and finally a module to equip board members and senior executives and help them facilitate the embedding of responsible banking at the very heart of their organizations. The banking sector has a key role to play in supporting the sustainable transition of our global economies. And these online training modules, this Principles for Responsible Banking Academy, is a crucial step to help banking professionals understand how they can take up this key role. I really hope that you take away a lot from today in terms of learnings, but beyond that, what I hope you feel today is a community of responsible bankers. Yes, we need to learn, we need to understand how to do responsible banking, but for this change to succeed, we need to feel like a community of responsible bankers worldwide. And one thing that is important in achieving such a community are conferences like the one today. So thank you to the Chartered Banker Institute for organizing this, and thank you to all of you for attending.
Well, thank you, Simone, for those inspiring words about the principles for responsible banking and for introducing the PRB Academy, which sounds like an exciting new initiative. I would like now to introduce our second keynote speaker, Simon Thompson, CEO of the Chartered Banker Institute, who's going to set the scene for today's panel discussion by giving his key takeaways from day one of the conference yesterday, before giving his insights into why responsible banking values matter. Simon, for those viewers who don't already know him, has been chief executive of the Chartered Bankers Institute for the past 15 years, after previously working for the Association of Chartered Certified Accountants in Central and Eastern Europe, and for the International Federation of Accountants. Under his leadership, the Institute has grown to become the largest professional body for bankers in the UK, with 33,000 members and students in more than 100 countries. Simon is the author of Green and Sustainable Finance, Principles and Practice, published by Kogan Page, and leads the Institute's work in this area. He chairs the UK Green Finance Education Charter on behalf of the Department for Business, Energy and Industrial Strategy, and is a board member of the UK's Financial Services Skills Commission. Simon is also a former vice president of the European Bank Training Network. Thank you so much, Simon.
Well, thank you, Joy. And let me add my welcome to our members, our partners, our friends, our guests, to everyone to day two of the 2022 Chartered Banker Institute Annual Banking Conference. Now, the theme this year is, as I hope we're all well aware by now, whether you were with us yesterday or you've heard from Joy and Simone already, the theme is responsible banking, both in terms of supporting the UN principles of responsible banking that Simone introduced so effectively, but in that wider sense too that we heard from our president, Steve Pateman, on our panel yesterday, that wider sense of a banking profession with socially purposeful, ethically professional, customer-focused banking at its heart that has long formed the basis for our Institute's ethos and approach to banking. And so the sessions on responsible banking values today builds on yesterday's topic, led by Steve and that wonderful panel chaired by our colleague and friend, Professor Aditya Singh, which looked at the relevance of responsible banking in a world that has definitely become more challenging geopolitically and economically, seems to become more challenging by the day, in fact. But let's remind ourselves that it's when times are tough for individuals, households and firms, it's when times are tough for customers and communities. That's when socially purposeful, responsible banking, delivered by customer-focused, ethically professional bankers, by chartered bankers like ourselves, by our 33,000 members, by the members of our partner institutes all around the world, that's when it becomes more necessary than ever. And by this, I mean banks, bankers, and banking that support society's goals expressed globally in the UN Sustainable Development Goals and the Paris Climate Agreement, most notably. So tackling our greatest global challenges, and also banks, bankers and banking that support the more immediate needs of households, firms and communities, especially those struggling with the cost of living crisis affecting many countries. Now, as Simone mentioned, we, together with our colleagues at UNEP-FI and GIZ, launched the PRB Academy, which went live on Monday to help develop and embed this idea, this ethos of responsible banking by building the capacity, capabilities, the cultures of the 300 PRB banks and banks worldwide more generally. Now, this is a hugely ambitious undertaking, providing education and training to help banks develop and sustain strong, purposeful cultures aligned with the UN principles on our own institute's code of professional conduct. But I think we have to be ambitious if we want to align banking with society's goals. We have to be ambitious if we are to meet the needs of households, firms and communities. We have to be ambitious if we are to create genuine, shared and sustainable prosperity for all. That's shared and sustainable prosperity for both current and future generations. Now, there's both a strong ethical case for responsible banking based on stewardship of the environment and society, and a strong commercial case for it too. I hope that's one area the panel might go into in a few moments. And that commercial case is based on the accurate pricing of climate, environmental, other sustainability risks, and also the identification of the financial opportunities for lending to and investment in low carbon firms and sectors, and especially to households and firms transitioning from high to low carbon. The financing this whole economy transition requires the rapid and sustained decarbonisation of lending and investment portfolios and a substantial redeployment of global capital. In fact, it requires a fundamental realignment of the finance sector. So to UN Special Envoy Mark Carney's words, every professional financial decision takes climate change into account. Let's just pause and consider the implications of that for a moment as our objective for banking and finance overall, to get to a point where every professional financial decision takes climate change into account. And I'd argue broader environmental and social sustainability factors too. That's every lending and investment decision, every risk assessment, every customer conversation, every product and service we design, every professional action, every professional engagement we undertake, all need to take sustainability into account. And if that's the objective, this will shape all of our careers, all of our daily professional practice, and the values on which these are based. Responsible banking values, those values aligned with achieving society's goals. And in turn, this will shape the strategies, the activities, the operations, and the cultures of the banks we lead or aspire to lead for many years to come. Hence the need for us, that's our institute, and the banking profession as a whole, to be incredibly ambitious about building our capacity and capabilities, about the education and training needed to do this. Because to pass what I call the Carney test, if every professional financial decision is to include sustainability, then every banking and finance professional needs to develop their knowledge and understanding of sustainability and responsible banking to the extent relevant to their role and organization. And then this needs to be applied to advise, to finance, to support customers and communities as they transition to more sustainable, low carbon business models. Now, I don't want to scare people. The good news is we don't all need to become climate change and sustainability experts. We're not trying to build a finance profession where every banker holds a PhD in climate modeling. What we need and what we're working to achieve at the Chartered Banker Institute and through the PRB Academy is a banking profession where banks and bankers focus on what we do best. That's transforming unproductive savings into productive lending and investment. In this case, in the new firms, the sectors, the technologies we need for a more climate resilient, sustainable world, and supporting the transition of existing sectors and firms from high to low carbon models. And that needs a knowledge of sustainability to become part of all banking professionals' overall skill set, alongside the traditional areas of credit and lending, risk, regulation, operations, and so on. Applied, that knowledge of sustainability applied in the context of the individual's role, whether as a frontline relationship manager, as a credit analyst, in marketing, in technology, or in risk and compliance. So that over that longer term, we develop a strong, socially purposeful culture of responsible banking. And that culture is developed and embedded so that every professional financial decision does take climate change and sustainability into account at all levels of the organization, in all organizations, everywhere. Now, this is a hugely ambitious undertaking, but we have to be ambitious if we're to align banking with society's goals, if we are to meet the needs of households, firms and communities, if we are to create genuine, shared and sustainable prosperity for all, if we are to develop and embed responsible banking values and a culture of responsible banking professionalism across banking worldwide. I very much hope you'll all join me and my colleagues at the Chartered Banker Institute and at the PRB Academy and at our many partner institutes around the world on what I think is an ambitious, exciting, and above all, very, very necessary journey. Thank you very much.
Excellent. Well, thank you so much, Simon, for your insights, which sets us up very nicely for the panel discussion that is to come. But before we start with the panel, I'm going to introduce our first audience poll question. And the poll question is, so get ready to vote. As far as you are aware, has your employer signed up to the UN Principles for Responsible Banking? You have 4 choices there. Yes, no, but we are aligned, no, and don't know. So if you could please vote now, and then I'll announce the results in a couple of seconds, well, minutes maybe. So we'll give it just a few more, and then we'll go to the results. Okay, so yes, that's great, 19%. However, 56% is don't know, which is obviously something that the banks need to do internally to let everyone know whether they're signed up to it or not. No is 10%. And then again, no, but we are aligned is 15%. So again, very good progress there. I think there needs to be more internal promotion of whether or not institutions are signed up. So thank you very much. That was fantastic. So we'll now move on to the panel discussion about why responsible banking values matter. So I'd like to start the session by introducing my panelists. Dr. Johanna Dickel, who worked as a sustainable expert and PRB implementation support manager and consultant at the UNEP FI. Then we move on to Wendy Dobson, head of group corporate citizenship at Standard Bank, having previously worked as head group policy, advocacy and sustainability and head of group regulatory and advocacy at the same bank. Then we have James Houston, who worked on group strategy at Lloyd's Banking Group and is a previous chartered banker, Young Banker of the Year finalist. He is a keen advocate of sustainability and responsible banking, having spoken in Money Live 2022, Leaders of Tomorrow panel discussion on envisioning the bank of the future. Next, we have Carl Oscar Olmling, head of sustainable strategy and policy at SEB Bank. He has 18 years experience from macroeconomic analysis, business development, and sustainability in an international context, including creating a framework for transforming credit portfolios to support the Paris Agreement and the SDGs. And we are delighted to have Luann Sia, who's Senior Managing Director, Head of Group Sustainability at CIMB Group. Her background in strategy, business transformation, and consulting has put her in an excellent position to pursue her latest mission to transform CIMB into a leader in sustainable finance and responsible banking in Asia. So a very warm welcome to you all. Just a quick reminder to our audience that we can take any questions as we go along. So I'd like to encourage you to use the chat function, and I'll spend at least the last 10 minutes or so posing as many questions as possible to our panelists. So let's explore why responsible banking values matter. So Luann, I was going to turn to you first, but everyone else can chip in as well. What is it about responsible banking that really motivates and inspires you as an individual working in banking?
Thank you, Joy, and thank you for inviting me. Perhaps I should do a quick introduction to CIMB because most of you probably haven't heard of us. We're we are a bank based in ASEAN and headquartered in Malaysia, and we've got about 32,000 people and are in all ASEAN countries. Quick introduction. So to your question, Joy, I think what really kind of motivates me is two things. The first is the huge and dire necessity that something needs to be done. And we're not just talking about climate, we're not just talking about biodiversity and deforestation, but it's also social issues like human rights, diversity, poverty, etc., etc. So there is a lot that's not right with what we're doing today as individuals, as companies, as governments, as economies, and how we function. And business as usual needs to change. So that is the necessity. And if we don't change, bad things will happen or are already happening. So that's necessity. Now, but the second thing, and one of the things that I always hear from people is that, I'm just one person. What can I do? Now, the great thing about being in a bank is that there is a lot that you can do. So as a bank, we have the ability to influence our clients, right? So if all banks say, okay, I'm not going to bank coal anymore, do you think there will be large coal companies, right? And will that business thrive? And so we have a lot of influence, not just to limit the bad stuff, but also to encourage the good stuff. And that's through products and services, sustainable finance instruments, sustainable linked finance, etc. So combined those two things, necessity plus the ability. And as bankers, we have a lot of ability. I think that really sets that for me.
Excellent.
Thank you.
Thank you so much. And James, how about yourself? When you think you're starting out on your career in banking, what is it about being, what is it about responsible banking that really, motivates you?
Yeah, thanks, Joy. And thanks as well to the CBI for inviting me onto the panel discussion. So following on from what Luann said, I think what motivates me is the opportunity that banks have. Banks help millions of customers and people every day, whether it be individual customers, small businesses or large corporates. And really, we're well positioned to understand how we can make a positive impact to people and be a force for good in society. And as Simone mentioned in her keynote, there is no trade-off between being a successful business and a responsible business. Actually, there's benefits to all, really. But banks really face a risk actually if they don't embed responsible banking in everything they do, because they risk losing talent, because employees and the young generation care so much about being able to make a positive impact in their work they do. So I think that's what motivates me.
Excellent. And Carl or Oscar?
Well, I mean, coming to someone who has been in working for a longer time than James, I think when I started working in the early 2000s, I worked for the UN with economic and enterprise development in emerging markets. And what I really realized then was that it's very difficult to create economic development without investments. You need something to catalyze the economy going forward. So actually, that was one of the key reasons I moved away from the UN into banking, because I saw the potential that banking could have on economic development if done right. So if you done those investments in the right way, there is a lot of potential to really steer to make sure that it is contributing to local economies and so on. And now, as I kind of been in sustainable finance now for more than a decade, the whole thing about both thinking about where to allocate capital. So you do that with a purpose, and not only where there is a need, but really where there is a purpose, and then doing it in the right way. So responsible. That's when you really can make the society change. And I think that's really what motivates me. And I think that is the same as what both Luann and James, if we do it right, both on allocating capital in the right direction and doing it in a responsible way, there is so much that banking can do. So that's really what makes me tick.
Excellent. And Johanna, I was going to bring in yourself now. I also know that you have a career in banking as well. So what motivates yourself?
Very, very good question, actually. So I went from the like my background is actually in geography, so I'm not a banker as the rest of you are, but I went into the banking because I understood the importance of the financial sector within the global economic system, to really make a change. So that was my motivation. And now going back to the UN, working with banks, that's what I want to make use of, because as Carlos said, we need investments, we need finance, we need that, power of redirecting financial flows and money to sustainable activities. So that was really my main motivation for the work that I'm currently doing.
Excellent. And Wendy, obviously from your position, Standard Bank has a footprint across Africa. Obviously, Africa is at the forefront in terms of climate change.
Thank you for opportunity to join today. So I moved from government into the bank 13 years ago, and I think working in Africa's largest bank, you have the opportunity to influence change across the continent. And by getting a bank that's at the heart of investment and trade financing, lending across the continent, if you can make even a small change in how you direct that lending, you can have a positive impact on the development of the continent. And our purpose as Standard Bank is really to drive Africa's growth in an inclusive and sustainable way. We want to be at the heart of a just energy transition for Africa. And so by bringing the sort of power and influence of the bank and the role it plays in the economy, and slightly just directing it to be aligned with the Sustainable Development Goals, with the Paris Agreement and so on, you can actually affect broader impact across society, across the continent. So I think that's what's really important for me.
Excellent. And I was going to aim the next question at you as well, Wendy, which is, there's been a big move, obviously, through COVID, through the COVID-19 pandemic, but also before that, the big shift towards digital. How does digital finance support the UN principles for responsible banking?
So often we in Standard Bank talk about two transitions. So we talk about the transition to a lower carbon economy, but we also talk about the transition to a digital economy. And we need to support our customers and clients on that digital transition as well. And that involves making available financial products and services to them through a range of digital platforms. When you're in a continent that is as large as Africa, but also has fairly poor infrastructure in terms of roads, rail, and so on, digital platforms become a very important way to build economic financial inclusion. So for example, last year we saw a 200% increase in digital lending through our operations in Africa. So there's a huge appetite and demand from individuals, from small enterprises, to make use of digital platforms. We launched a new product called Trader Direct, which really supports very small traders, often informal. And this we've over 8,000 small traders took up use of this platform last year. And it's in countries like Lesotho, Cote d'Ivoire, Zambia, countries that are quite poor. And sometimes we may not think of them as being sophisticated from a digital point of view. But I think the advantage of digital is this ability to leapfrog old technologies and old infrastructure, and to be able to provide a range of what are really value-adding services that help people participate in the economy, which is absolutely, vital if we're going to address things like poverty and inequality.
Excellent. And Luann, in terms of CIMB's footprint across ASEAN, again, how does that digital finance really support responsible banking? And are there any challenges to that?
So one really good example is what we're doing in the Philippines. And in the Philippines, number one, it's a very poor country, but number two, they're made up of hundreds of islands, right? So can you imagine having a physical branch on every island? So what we've launched is actually, well, not recently, but a couple of years ago, we started up a fully digital bank. And basically everything is through a mobile phone, and we've got people like rickshaw pullers who, they're depositing a few US cents a day, right? And this is the first time in their life that they've ever had a savings account. Why? Number one, because there were no branches around, but number two, because there was a minimum deposit in order, and it's like maybe 50 USD or something like that, right? I don't know the actual amount, but they didn't have that amount to open a savings account, right? And can you imagine if you don't have a savings account, how are you ever going to get a home loan to buy a house? And if you don't have a home loan, and if you don't have 50 bucks, even, how are you going to have a house? So and we're talking about just very, very basic necessities. Right. So yeah, I think there's a lot that digital finance can and is already doing, but a lot more potential as well.
Excellent. And Johanna, from your perspective, again, how does it support the UN principles? But then again, are there any challenges that you see? And I'm also going to bring in Carl Oskar as well, which is, operating across the SEB operates across the Nordic region, which is already highly digital. But Johanna?
Well, I mean, digitalization is one out of the two mega trends that the banks are working on, sustainability and digitalization in general. So I wouldn't talk about digital finance now, the banking colleagues here are better to equip to do that, but I talk about, digitalization in general. And I think making use of the benefits of having digital processes would also help benefit sustainability. One of the main challenges that the banks, the PRB signatories are facing is data, and everything related to data is connected to digitalization, to where do I get the data from, how do I collect them, how do I automate the processes, and how can I later then analyze the data accordingly. So that I'd say is one of the big challenges, but also one of the big opportunities that we have at the moment, because in that sense, if the process is set up accordingly, if you have the right kind of data to start with, then you can rather easily manage the impact as well, because you have the data at hand. Well, measurement is the first thing, and then managing the impact, that is probably a bit more challenging. But the measurement part would then really be dealt with, and that is one of the big opportunities of digitalization as well.
Excellent, thank you. And Carl Oskar?
Well, I mean, I can really agree with the fact that digitalization is really helping informality to go formal in many ways, because you can both, work with your bank, but also you can often access other systems once you have kind of a bank connection. But I think in the Nordic region, I think it's the challenge is almost the opposite, that we are digitalizing and therefore creating exclusions. So the older generation in the Nordic region, they are, that's where we see challenges. How can we transform into digital society without losing the older generation in this? So I think that's where we are putting efforts into how to make sure that there are ways of contacting your bank physically, phone, but also how can you make sure the apps and so on are having ways that can support older people in terms of both graphics and so on, and user interface. So it's a whole thing about not leaving anyone behind in these fundamental transformations that we're doing.
Excellent. And James, did you want to come in?
Yeah, please. So I think my take on this is that actually having digital finance channels can also really help to support responsible banking, because this allows us to provide customers with more information, which in turn allows them to help make more informed decisions. So for example, when we think about mortgage intermediaries in the UK, so brokers can now use Halifax's home energy saving tools to receive, a personalized action plan showing estimated property EPC ratings, energy costs, as well as carbon emissions from a property. And generally in retail finance as well, having a digital finance allows us to provide customers with personalized spending insights, as well as a personalized subscription hub. And all of this information just helps customers understand more about their own finances and manage their money. And I think by definition, this is responsible banking, giving individuals the tools to meet their own needs.
Excellent. All right, I'm going to change tacks a little bit at the moment. I thought Simone gave a great introduction to the PRB Academy. Johanna, I was going to ask you the next question, which is around, how can the PRB Academy really support banks globally to address the complex global environmental and social challenges we all face, such as the triple planetary crisis of biodiversity loss, climate change, and pollution, coupled with increasing social inequalities?
Yes, I mean, at UNEP, UNEP, that's the Environment Program of the United Nations, we always speak about this triple planetary crisis that humanity kind of has caused. And what is clear is we need to combat that crisis. And to do that, all parts of the economy must engage. So it's the financial sector, the banking industry, but the other parts, the real economy as well as governments and so on. But the banking sector has a key role in helping global economies become more sustainable by, for example, providing more responsible financing, greener loans, inclusive financial services, and so on and so forth. But when I say the banking sector, I do actually not only mean, the financial services provided by the banking sector, but what I mean first and foremost is the people working in the banking sector. And when we had the initial poll in the beginning, when half of the banks said, well, we don't know if we sign up to the principles, well, that's an initiative, but probably you could also say that half of the members don't know so much about sustainability per se. And that is where we wanted to come in, because the people in the banking sector, they are the ones, they develop the products, that set up the processes, that talk to the clients. So educating banking professionals in their role, that is actually crucial, because many bankers lack the knowledge and understanding how to, for example, identify and manage sustainability impacts of the portfolios, how to then align them with the UN SDGs, the Paris Climate Agreement. And that is the reason why we've established the PRB Academy, UNIBFI, together with the Chartered Bank Institute and the German Development Agency, GIZ. And that is really a global academy to train basically all bankers about the climate emergency sustainability, because that knowledge is the basis of everything. So we want to use that innovative potential that is inherent in the banking sector, in the bank's employees, by first of all giving them an informed basis. What is climate change? What's biodiversity loss? What are we talking about? What does sustainability mean for a banking employee? And really give them the skills and knowledge to consider then responsible, sustainable practices in the day-to-day decision making. And that's then the next steps to implementing the PRB, for example, Principles for Responsible Banking, or help support a sustainable future for banking. So that is a bit the underlying reason why we want to really mainstream sustainability in the banking sector, bring in tens and thousands of banking employees to give them that basic understanding, but then also not only basic, there's also more specialist roles. And another, in terms of number, rather small employee target group is, but very important, is executives and senior levels. So there's a separate module only targeted for those, because they have less time. So there's a shorter, more condensed module, but they are also very, very important to bring that into the organization and really set a scene, create a spirit of, say, responsibility and sustainability in the banks.
Excellent. Wendy, did you want to come in terms of the role the PRB Academy can play?
Thanks. Thank you. I think that what is fantastic about the PRB Academy is the way the curriculum was developed and how it's the principles for responsible banking ethos and thinking and approach, the philosophy around it is really infused in the curriculum. And a key part of driving responsible banking is to change the cultures in our organizations. It's not just about technical decision-making toolkits and numbers. It's also about changing hearts and minds and getting people to think differently and understand the responsibility that they have for contributing to a better world. And I think what the Academy does is it takes what is this very complex topic for people who are outside of this world. There's a lot of jargon and acronyms and so on, and it's rapidly evolving. There's always new reports coming out every day, but it turns it into something that's manageable, bite-sized chunks of information, presented in a very user-friendly way. So it's really a fantastic initiative that's been put together, and I think it's going to go from strength to strength as it gets rolled out and new content gets added to the program. Excellent.
And James, how will it impact maybe your career development even?
Yeah, thanks, Joy. I think it's a fantastic resource, whether it be for younger bankers, as they look for their career progression, or as we saw in the poll earlier today, some people within the bank aren't aware of whether they're signed up to the principles of responsible banking. So I think it's going to help raise awareness. I think overall what it's going to do is help mainstream sustainability training. The more resources available to people, the more they can consider in the decisions they make, social and environmental considerations.
Excellent. And I saw you nodding quite a bit, Luann. I don't know if you wanted to add anything else.
Yeah, what James said is very, very true. If we want responsible banking to be mainstream in banking and we want everybody to be on board, that is a lot of bankers to train, right? So a centralized and global standard resource is really, really important to do that. And why I say this as well, in ASEAN, for example, there are a lot of misconceptions about sustainability. There are misconceptions that sustainability is a Western agenda, for example. And also, it really helps to avoid greenwashing if everybody is looking at the same standard. So fantastic.
Excellent. And Carl Oscar, did you want to answer this question? I also have another question to ask you as well.
Well, just quickly on this one, I would say that what I like with this PRB Academy is that they have really tried to make it, semi-customized in a way. When we look in the bank, how should we develop training? We really need to have some kind of entry-level training. We need to have something that is more targeting, those who meet the kind of clients and then more specialized. And I think there are a lot of in the PRB Academy that kind of meets our way of thinking on this. And I think that's important because you cannot have one size fits all for all bankers. And I think that is an important part in this. And the other thing here is that, an important thing once a bank really starts, taking sustainability and responsibility seriously, it means that all different functions of the bank starts integrating this. But there is no competence of integrating these things. So when you go to the HR department and you say, we need sustainability training, they're like, what? And how are we going to create this? So just getting this kind of, well, here we have kind of starting map of how to train, and then we can work from that. I think that is a great start for many banks.
Excellent. All right, I'm going to move on to another question, which is really around regulations, because I think that's also, is quite challenging for a lot of banks in terms of where the regulations are at the moment. But And Carl Oscar, I was going to pose this question to you. So how can, for example, the PRB and also maybe the Net Zero Banking Alliance, as a climate accelerator of the PRB, how can it be helpful for regulations like the EU taxonomy, for example?
Well, I think they are helpful. They're helping each other. These are mutually reinforcing things. If we start with the Net Zero Banking Alliance, I think that this is the strongest kind of part, because here we're actually setting hard metric targets on credit portfolios. That has never been done before. I mean, PRB was great when it came. And it creates much more of a overall strategic framework, but the net zero banking goes one step further, and it goes one step further than regulations as well, because when you look at least European regulations around finance, it's all about transparency. We have, for example, the EU taxonomy that is about being transparent about how much green and sustainable activities that you have in a corporate or that you're exposed to in your credit portfolio for a bank. But now, how is this linked? Well, the EU taxonomy, for example, is a great way of breaking down larger frameworks into an activity. So, for example, if we take the Net Zero Banking Alliance and we go into the power generation, you're supposed to develop, your baseline, your finance emission intensity baseline, and then set targets for 2030. The taxonomy, it goes into power generation and says, well, a good performance today, that's when you are below 100 grams of CO2 per kilowatt hour. Then you kind of get a bit more feeling for this, and then you can go and talk to clients about it. So I think in a way, the Net Zero Banking Alliance sets the trajectories and where you want to go, but the taxonomy needs you to start thinking what is actually kind of good performance already today. So I think from that perspective, they are reinforcing. If we take the overall PRB framework, I think that one has a lot of merits when it comes to now I'm talking very much Europe-centered here, and I'm sorry about that. But for example, we're getting a new reporting directive, the Corporate Sustainability Reporting Directive. And this one is very comprehensive and takes a lot of different areas into account, where you need to provide a lot of information, both in terms of your performance and different metrics, but also on your ambitions in these metrics. And I think here PRB, which has been now in place since 2019, has actually prepared many banks for this, because they have been forced to start thinking about, where do we stand? Where do we have our biggest impact? What is our materiality, and how can we set target on this? So in that sense, PRB has kind of prepared, and that is really what we heard also when Sinuan started, that the PRB is really kind of making banks fit for the future, for the next generation, and now the regulations are coming and requiring many of these things. So in that respect, I think PRB has been very helpful and will be helpful. But once the regulations come, I think they will actually also support how we are implementing PRB, because they are just putting requirements on what you said in the PRB. So I see them as supporting frameworks, basically.
Excellent. And Johanna?
I mean, I very much agree with what Carl-Oscar said. So these are complementary sometimes even. What some of the things that do become mandatory over time, or is taken up by regulation, build upon the work that voluntary initiatives have undertaken, like the PRB or Net Zero Banking Alliance. I mean, now, for example, most recent example is that the ISSB, the International Sustainability Standards Board, will include Scope 3 financed emissions in the reporting requirements, which is, of course, one of the basis that you need to have underneath, like when you have signed the Net Zero Banking Alliance, but also the PRB, and have a climate target in place to understand where you stand with your current emissions baseline, and that's building up. So we see more and more convergence in those areas. But then of course, not only climate, we have other areas as well, and regulations. We do expect more and more regulation coming up also, for example, on nature and biodiversity. That is something that we are looking into. Of course, PRB is a voluntary framework, therefore the requirements are a bit different. But it is about, you know, using that, say, front runner advantage. If you already position yourself as a bank in that area and already do some of the work, you can later use that when, for example, regulation comes in. Of course, Europe is a specific context with the EU taxonomy and a lot of regulation already there, but PRB, for example, is a global framework. So we have a lot of differences as well as in terms of the context that the banks operate in. And therefore, you know, that's also one of the very important things about the principles, that we want to be a global framework open to everybody, and therefore also find solutions that work for everybody, not only for the banks that operate in highly regulated, like sustainability regulated areas.
Excellent. And Luan, taking it outside the EU context, obviously there's other regulations coming through across the globe. You know, again, how does the PRB sort of, you know, help, you know, actually set forward, you know, the regulations that are coming to the fore?
Yeah, so when we joined PRB, that was when we just started on sustainability. This was back in 2018, 2018 was the drafting process. And at that time, in developing ASEAN, you say, you talk to clients about environmental stuff, and they give you a blank stare, because why is the bank suddenly asking me about my forest practices and things like that? So it was really ground zero. Yeah, and by joining PRB, that was our springboard, first of all, and we accelerated ahead of the regulators. Yeah, because there are so many framework guidelines, peer support. There's a massive network of people who, people like Carl, who has been doing this for a while, and that I think network is really fantastic. I can pick up the phone and call someone and say, hey, how do I do this? And because we accelerated quickly, we were pushing our regulators. So in developing markets, it's really us pushing the regulators. And so we work with actually a lot of regional regulators. We were in 10 countries, right? So, for example, we work with them to write guidelines. We work with them to put out a TCFD handbook, for example. So so PRB has helped us, and NZBA as well, target setting. And we are now helping the regulators.
Excellent. And Wendy, I see you nodding quite a bit there.
I very much relate to what Luan said, that we are now ahead of our local regulators and are working with them to share our learnings and experience with them. So, for example, in South Africa, we have an initial green sustainable finance taxonomy, which to some extent is modeled on the EU taxonomy with some local variations. So what we found is, by following the PRB framework, we are ready for regulation. And it's been very helpful in terms of thinking about your business in a different way. So thinking about impact, how to measure impact, how to set targets in relation to impact. I think it's really critical in bringing, and how do we find the right balance between global collective action and ambition, but local and regional differences. And I think one of the strengths of the PRB is that flexibility. It's almost sort of flexibility within a framework that's provided, because we have The PRB has 300 signatories in 80 different countries. So I'm wearing my banking board co-chair hat rather than my Standard Bank hat here. So we have banks, we have the leading global banks, but we also have small local banks. We have banks that provide a full suite of banking services, and we have very specialized credit, small credit unions. So to create a framework that's relevant for all of them allows the fast movers to move ahead, but doesn't leave people behind, I think is really the strength of the PRB. And also, as Luann said, that peer network is really invaluable. The ability to interact with your colleagues around the world and say, how did you guys tackle this? What's the magic ingredient? And it's things often, it's small but powerful things. How did you get your investment bankers on board? Recently, I was with PRB colleagues and I was saying, are you guys also struggling with your agriculture teams in terms of getting them to deal with this work? Or is it just my bank where it's difficult? And they were all saying, no, where they're all having the same challenges and so on. And it was good to know that this isn't, this is something we're all struggling with, and we can actually support each other. It's a really supportive community as well. So yes, you can, there's the idea that you're getting ready for future regulation, but it actually goes beyond that, I think, in what it provides.
Excellent. Wendy, I was also going to ask you, like, one of the other big challenges I think that the banking industry and other industries are facing at the moment is accusations maybe of greenwashing, right? I think that's a huge challenge. So, in your view, what do all banking and finance professionals need to know about sustainability, really to have those, as both Luann and Carl Oscar said, when you're having the conversations with customers, with colleagues, to guard against this greenwashing?
I think transparency is critical. So we have to communicate with our stakeholders and sort of take them into our confidence that this is a journey that we're all going on. And at the moment, while we are seeing some convergence around standards and taxonomies and definitions, there's still a long way to go. So that means that you have to, for example, rebase numbers. There's a reluctance on the part of some banks to disclose because we have concerns about how credible is the data, how good is the modeling. When we say something is green finance or transition finance, how have we defined those categories? And have we got it right? And so there's this big push, this urgent need for disclosure and to put things in the public domain. But we are still, that underlying sort of measurement is perhaps not as mature as, say, it would be for accounting standards. And that means you have to go back and you have to say, okay, well, we've improved our method of calculating this. But what's happening is the backlash against some of this is leading to something called green hushing. Mm. So banks are so worried about the reputational backlash around greenwashing that they're rather not disclosing. They're rather keeping quiet because they're worried. There's this chilling effect of what's happened, for example, with DWS in Europe. To say, how sure are we, how confident are we in these numbers that we're putting into the public domain when the measurement methodologies are not mature yet and they're not consistent. So ISSB, it's a great initiative. It's moving us in the right direction and so on. Taxonomies are important, but every country is now coming up with a taxonomy. What is transition finance in one region is not going to be transition finance in another region. So it is a challenge. So I just think, one, transparency is important. Rather explain your methodology, explain the caveats, explain that you're on a journey. And I think we also have to get better at talking about the negative impacts of what we do, and not just always talking about the positive and putting the positive spin on things. So let's show trust in our stakeholders, and maybe they'll be more trusting of us.
Excellent. James, I was wondering, in terms of what do you think professionals need to know in order to avoid this, potential accusations of greenwashing?
Yeah, thanks, Joy. I think it comes back to that question earlier on the, on the PRB Academy and helping to mainstream, sustainability skills. Because once you do that, you can embed the, sustainability thinking into everything you do. And there becomes these network effects between employees when you have this, as kind of mentioned by, Wendy and Luann earlier, that you can rely on your colleagues, and also you can take conversations further when it comes to sustainability. I think one of the other important things, as Wendy mentioned, was transparency. And taxonomy will really help with this. It's going to help create more consistency and comparability between banks, and thus helping make them more accountable for their disclosures.
Excellent. And Luann, did you want to add anything to those answers? I think they're, right on the money, but
I think I might kind of bring this down to the frontliner level, right? Because it's very daunting to talk about these very complex issues and multiple acronyms to your client, who, by the way, is in the sector. You're not, right? And they probably know more about, sustainability issues in the sector than you do, or maybe don't know, right? But how do you get that? How do you build up that confidence to start that conversation, have the conversation? So, and I think one of the things is that, okay, so first of all, a basic understanding of general topics, climate change, human rights, for example, is very, very important, right? But the most important thing is, how do you then apply that to that particular sector, to that particular client? And the key to this is understanding what is material to the sector, right? So, for example, I've had RMs come to me and say, hey, we want to finance this coal plant, and they're very sustainable. Why? Because they use recycled paper. Okay, I'm being facetious, right? So what is material to this client, to the sector? So, and that is really the key piece of understanding that is needed in order to kind of avoid greenwashing.
excellent. Carl Oscar, did you want to add anything?
Well, I just want to build on Luann. I think that's kind of spot on, and I just want to kind of highlight here that you can do a lot of client interaction that is about, responsible practices and sustainable practices that has nothing to do with greenwashing. But once you start labeling financial products, that's when you get into the greenwashing space. And I think that's important to kind of remember. In both situations, just as Luann said, you need to make sure that you are identifying what are material issues. But then as a next step, you really need to understand, materiality is about, sectors, geographies, but you need to learn. You cannot just go to a company and talk to them. You need to kind of understand where they are, what they are doing, and their situation. And once you have that, and you can combine that with a little bit broader understanding about, what are the technologies that needs to change in these sectors, that's when you can start making financial products where you're actually having ambitions, because this is the issue often. You call something green, but it may not be green, or you have sustainability linked, but it's not very ambitious. And that is the danger, because we as banks are competing for business. And if we don't have our integrity high enough to really say, this is below the bar, this we cannot call sustainability linked. And at SEB, we have created a sustainable product committee. So basically all types of labeled products need to go through this before it goes out. And that is a way just to create some governance around what we actually go to the market with.
Okay, great. I was going to move on to the next COP. So COP26 was summarized by many as delivering more than what was expected, but less than what was needed. But obviously there's been a significant progress in terms of aligning finance with the objectives of the Paris Agreement in particular. But we're now looking forward to COP27. And Luann, I was going to ask you first. So what would you like to see emerge from the meeting in Sharm el-Sheikh, both overall and then in terms of finance?
Where do I start?
Exactly.
So first of all, there were a lot of really good commitments from COP26, right? But the question is, how much of this has actually been done or in a good kind of progress path to being done, right? I think very little. People are still wrapping their heads around it, I guess panicking a bit. And you know, even if all the commitments were met, you know, we're still looking at a 2.4 to 2.6 degrees warming, which falls short of our 2 degree or 1.5 degree target. So we do need enhanced commitment. So it's difficult, right? Because first of all, you don't even know how to implement your current commitments, but we need further commitments. But it needs to be done because otherwise we're looking at 2.5, 2.6 degrees. So from a financing point of view and from a developing market point of view, I think accessibility of the finance is really key. I mean, there's this huge number there, and everyone's like, wow, that's a lot of money, but that money is not accessible. It's not accessible at the right speed. It's not accessible, and compared, I mean, if you look at the just amount of effort needed to get that, you have to write like 10 Bibles to get, you know, a few $1 million. So, so does that make sense, right? Also, there in the developing markets, a lot of transition type projects, especially for the poorer countries, and those are struggling to get finance. Sure, it's not at, you know, a global level. Just to give you an example, right? And we're having this debate when we were doing our own SDG fund. We wanted to say that a waste collection system in Indonesia, there are thousands of islands, right? And right now they're chucking their stuff into the ocean because there's no waste collection and there's nothing, right? So they're chucking into the ocean. And we wanted a waste collection system or handling system to be counted as green. But according to global standards, there needs to be separation at source. And I'm like, what? Separation at source? These guys are chucking stuff into the sea. And you want separation? Yeah, so there's a huge kind of gap. And how do these projects get funded, right? So that's the challenge we're facing.
Excellent. Johanna, I was going to bring in you just to see, you know, again, you know, what are you hoping to see from emerging from COP27?
Action based on scientific recommendations that have been out there for years and decades now, but really the action that is in alignment with what science tells us. That I'd say is one thing. And in terms of finance, I mean, fully agree with what Luann said. I'd say the aspect of global justice is quite important. That's one thing. And the second thing is there has been a lot of focus on mitigation, less so on adaptation in the financial sector. And I think that is something that we need to tackle. And I'm hoping that this would be taken up since it is based, like the COP's happening in Egypt, which is a country that is highly affected by the physical impacts of climate change and therefore needs to put adaptation measures in place. So I'm hoping that adaptation is something that gets a bit higher on the agenda, which does not mean that mitigation should, you know, go down on the agenda whatsoever. It's just both aspects need to be tackled.
Excellent. And Carl Oscar?
If I should say a few specific issues, I think if they manage, I mean, they have been trying since Copenhagen 2008, I think, with this $100 billion in climate finance annually, and they haven't succeeded. But if they succeed with that, I think it is important also to think through how do we get the biggest leverage from this. because what we're seeing in developed market is that we're trying to use now. I mean, we have had blended finance all over the world for a long time, but it's not really taking off. Now we're seeing in developed markets how governments are going in and they are doing risk cover on new technologies, hydrogen, battery manufacturing and so on, just to get the banks being able to go in and cope with that risk. And I think these I really would like to see this 100 billion commitment go through, but then I also really think it would be great if there is a lot of thinking of how do we make as much get as much out of as possible. And I think that's where blended finance together with banks is an important part here, so that you can actually access a much bigger pool of money with that pool. That's how we can tackle the issue of that we need trillions of dollars and not billions. Another part, just a small thing, but in Glasgow, we saw how carbon trade became more or less formalized between countries, but from a kind of non-state actors, it has not yet been formalized. And I think both these together are, I know there are a lot of criticism against offsets, but I getting more formalization and more methodological robustness will actually make sure that you cannot talk about any kind of offsets and kind of go with that. There needs to be, the offsets needs to have a certain level to actually count. And I think that helps our whole community in what we can do and not do in terms of offsets, which means that we may actually need to focus more on actual reductions as such. So I think, but also creating this trade, I think is important because it creates a much more economically efficient model for the global economy in decarbonizing.
Okay, great. I'm so sorry, but I think we're going to have to move on to the last couple of questions, and then we have a poll question, and then we have a few questions from the audience. But the question I wanted to ask James, who is a finalist in the Chartered Banker Institute's Young Banker of the Year Award competition last year. So James, sort of what would you say is unique about this Young Banker initiative, and why is it a good example of responsible banking in action? And then how has this actually helped progress your career to develop as a responsible banker?
Yeah, thanks, Joy. It's a great question. So at its core, the principles are aimed at helping banks meet the goals of society, and the Young Bankers are a great example of this. Not only because it highlights the challenges that society faces, but it actually also offers solutions to them. The Young Bankers in the competition recognize the wide array of challenges, both environmental and social, when it comes to the challenges for society, whether that be last year Rosie Lyon's proposal aimed at helping sufferers and survivors of domestic violence, and also Matthew Nimby's proposed e-statement last year. These Young Bankers bring their fresh perspective and creativity to help enable change in the industry. For me, participating was a great opportunity, not just to share my proposal, but actually the highlight was listening to these other Young Bankers talk about what they were passionate about. And it's inspiring and helps us all think about how we can drive change within our own organizations and how we can be a force for good in society. On the question on how it's helped progress my career, it's been a fantastic opportunity for two main things, really. First of all, it's given me a framework with the principles of responsible banking, a framework with which to think about these challenges that society faces. It gives me the structure and tools. Secondly, it also gave me confidence in myself and my ideas. And them together have helped me, those two things together have helped me articulate and share my thoughts when it comes to sustainability within my own team. And to be a responsible banker, we must do this. We must be confident in our own ideas on sustainability. And we must have these conversations and embed climate and social considerations into our decision making. So for instance, when I was in mortgage intermediaries, we were looking at how to deliver retrofitting solutions to customers through giving cashback with Halifax's Green Living Reward, cashback to customers for making green home improvements. Also off the back of the competition, I moved to a role in group strategy, where I got to think more about, alignment. How do we get business strategy to align to individual needs and society's goals? And helping Britain prosper is a great example of this. It's our purpose and something colleagues think about every day. And I also think, it's important to address young people moving into banking for the impact they can make, right? So when people leave university, young people leave university, they often think that the banking industry isn't a place where you can make an impact. This isn't a place, where you can make a difference. And actually, this misconception is not true. And I think the opposite is true. Finance is the catalyst for change, and financial institutions are at the heart of the transition to net zero. And that's what's really excited me about working in banking since I've joined, and actually what drew me to the competition in the first place.
Excellent. Well, thank you so much, James.
Thanks.
We're just going to have one more poll question, audience poll question, before we go to the Q&A from the audience. So we'll just bring up the poll question now. How confident do you feel about having green conversations with your clients? It's not at all, not very confident, but only at a high level, very confident. So if you could quickly vote now, and then we'll go to a couple of questions from the audience as well. Just a few more seconds. And the results are, so very confident is only 6%. Confident, but only at a high level is 48%, which is the most. Not very confident is 41%, not at all. So the good news is obviously that there is some level of confidence amongst people to talk about having these green conversations. But obviously, I think there's a lot more education that can be done to make people feel a lot more confident. So we'll go to one question from the audience, which is about carbon trading. I think the question is really around, how is carbon trading, where a developed nation is offshoring their carbon to developing nations, how is that meeting the paper targets that are being set? That's a very tough question, actually. Does anyone want to tackle that? Wendy.
Yes, I think this is a really important question. So for example, Africa is essentially a carbon sink for the world. So the equatorial forests around Central Africa and the Democratic Republic of the Congo actually absorb more carbon than Africa as a continent emits at the moment. So Africa contributes less than 4% of global emissions, but those forests absorb more than that. So how do we recognize, how do we put a value on that? How do we convince those countries, Gabon, DRC, not to sell off, oil and gas blocks, because they have found oil, for example, in the DRC? How do we find mechanisms to where it is economically and financially viable to keep the carbon in the ground and not to extract it and to protect those forests as carbon sinks? And I think this is where carbon markets have to be developed, so that we can put a value on these natural assets and make it viable for very poor countries to protect their natural resources, their nature-based resources. This is something that the Mo Ibrahim Foundation is really taking into COP27, is how do we recognize Africa's sovereignty in respect of some of these ecosystems. And carbon offsets have got a bad name, and justifiably so. But I think with, for example, the voluntary initiative around carbon markets and carbon trading, we need to bring some integrity to this market, some level of independent assurance around offsets, and start to make this much more viable. Without these kinds of mechanisms, I don't think we will meet the mitigation targets that we need to from a science-based point of view.
All right, I might move to another question, which is, you know, and this is maybe a bit more of a philosophical question about what can we really do to shift from profit-based financial institutions, banks, to the institution that supports and realize this initiative's responsible banking that really uphold the sustainability agenda. You know, it's obviously super challenging, but how do we start? Johanna, do you want to tackle this?
Well, in our way of thinking, we do not see these as opposites, but they should basically become one, and sometimes are already one. But that's like, we do operate within an economic system that is based on profits. That is the system per se, and within that system, banks do have a certain role to play. And with for example, the signatories of the PRB, they want to take that role, being responsible banks. And now, I mean, how to start with, that is basically what the principles are about. There are 6 principles with different steps, what a bank is supposed to do. First of all, understand the portfolio. That is really at the heart of the principles. What's the portfolio composed of, and what is the impact that is caused by my portfolio? And then accept that responsibility for bank's portfolio, for the financing and investment activities, and manage the impact by setting targets. That is basically the framework of the principles, and that is what a bank's supposed to do in our way of thinking. And we do not see the two as two separate things, but basically as one in an ideal situation.
Excellent.
If I may come in there, I mean, if we are to change our economic system, I think that is a bigger thing than the PRB. So, you know, how does a bank work with this in practice to get it moving? I think one thing that we have really tried to emphasize and recognize is that we are at least we believe in our bank that we are currently in what we call an kind of environmental super cycle, in the sense that regulators are now coming up with regulations pushing the real economy. We are seeing how states are committing money to both go into climate change and other environmental actions and support businesses. And we're seeing all these commitments in net zero banking, PRB, and so on. And at the same time, when we look at savings and funds, it's really the sustainability linked types of funds that are increasing, while the others are more or less flat. So we are in a situation where we have a super cycle of a number of different factors coming together to drive investments during a very short period of time. Now, this is the dream of the capitalist when you can do it. And if you make that actually kind of coincide with what we want to achieve, I think this is when you start steering it right. It means sometimes that you need also to do things, stop doing things. And that's why it's so important to show that, well, we really need to capture the sustainability super cycle, because that's where we're going to make the money of tomorrow. And that's why we can afford to stop doing things as well. And if you can manage to have that kind of bigger rhetorics and also put KPIs on this, how to drive the change in what you're doing, the steering of what you're doing to the new profit areas of the future, just like corporates have done that for ages. You know, it's just banking has been the same for the last, 700 years. The Medicis in Italy, we've been doing exactly the same thing, but corporates, they stopped doing typewriters and start with computers, and they changed all the time. Now we have to do the same thing in banking. We have to actually stop doing some type of things, but we have to do a lot more in other areas. So I actually do think that if you just get the incentive structures and the thinking right within the system, you can do a lot, basically.
Excellent. All right, I'm so sorry, but we've run out of time, which is such a shame because we've had some really, obviously some great conversation and discussion going on, but also some great questions that have come in from the audience. But I'd just love to thank my panelists for such an interesting and insightful discussion about why responsible banking values matters. And I'd also like to thank our keynote speakers, Simone Detling, and of course, Simon Thompson again. So thank you so much for joining us today. I hope you've enjoyed the fascinating discussions that we've had, and please enjoy the rest of your day. And hopefully we'll see you next year again for the Charter Banker Institute's annual banking conference. Goodbye.